is a market recap of Friday's trading session, June 27th, 2025. Here on the top right, we have the Asia and London trading sessions. Asia from 7 p.m. Central to 11 p.m. Central. London trading session from 1 a.m. Central to 4 a.m. Central. Prior to market open, we see price trade above London session highs, indicating a possible bearish movement to the downside before market open at 8:30. Here on the 1 minute chart, you can see as we trade above the London session range, just over here, we have price trading above the London session. Here we see a change in state of delivery, or a market structure, actually a market structure shift, not a change in state. We see a market structure shift. Price breaks down and closes below this recent swing low. Indicating a possible movement to the downside. We see a fair value gap created. Price trades up just into this gap before it breaks down further. We see it retrace once more prior to the 8:30 open. We could see this as a pre-session trade. It could help you build your position for the intraday trading session. The target can be set to either these relative equal lows. I did not set this as a relative equal low, considering it was violated from this swing low, but we have this relative equal low here. We can set that as a safe take profit level for a roughly 2.89 RR as price trades back up into this bearish fair value gap, trades back down. We trade well below that relative equal low into the sell side liquidity. Price briefly trades below the London session lows, making the assumption that this is a possible liquidity raid. This can only be verified upon a market structure shift to the upside, indicating a possible reversal. We see a on the 5-minute chart here, we see a fair value gap formed, sell side imbalance, buy side inefficiency, as it breaks below these relative equal lows, and this line indicates here, this was the London session lows. We see that trade below and wick back up. We wick down, but traded back up, closing above. Here we see price move above on the 5-minute chart. We'll look on the 1 minute. We can see a market structure shift closing above the most recent swing high and this bearish downtrend. Possible opportunities to enter a trade could be seen either here in this 1 minute sell side imbalance, buy side inefficiency, or we can trade off of the 5-minute sell side imbalance, buy side inefficiency. As price closes up above, we can set a limit order just at this bearish fair value gap. On the 1-minute chart here as well, we see a possible breaker block to the upside, bullish order block, breaker block to the upside. Here we have a few areas of confluence. We can see that this fair value gap has inverted. It's formed as it was making a run on liquidity. to the downside, change state upon this candle close. Then we see this bullish order block formed. We see that close above this recent swing high, indicating a market structure shift. We can position ourselves to enter the trade either in this fair value gap, this one, or this order block. Looking on the 5-minute, we see this 5-minute presented. We can frame our entry from this inversion, enter the trade on this down close candle as it wicks down below, setting our stop loss to be either at the most recent swing low, or we can set it at the end of this bullish order block, targeting the most recent highs during the market session open. Later in the day, we saw price trade within this premium area of the market opening range. This leg up, we see price stay within this area. In hindsight, I would not be taking trades considering the highs and lows of the London trading session have been taken already. We're just going to see where price goes and observe. Here we see a market structure shift to the downside. Price comes back up. We see price get rejected by this bearish order block. We see this long wick trade candle close up, followed by 2 consecutive down close candles. We have this bearish order block marked, denoted by this red line here. We see price trade back up with a strong movement to the downside, trading through this buy side imbalance, sell side inefficiency. I would see this more so as an expansion more than an entry position. I would more so consider this bullish fair value gap here as we were leaving previous previous trends swing high, most recent swing high traded above that closing, followed by an expansion. Here, I think this would be seen as a displacement, making this fair value gap more likely for price to trade back into and see as an opportunity for entry. Price hits this bullish fair value gap, moves back upwards into this bearish order block. We see price trade above this failed or this swing high. Price closes above, makes it back down. We can make the assumption this is a possible raid on liquidity as it moves towards the downside. We see a market structure shift as price closes below this most recent swing low, indicating a possible movement to the downside in the overall trend. Here on the 5-minute, on the bottom right corner, we see a bearish fair value gap formed. Considering we are currently in a premium zone of the market opening range, it's a higher probability to place a short, and a liquidity raid was formed prior, followed by a bearish fair value gap to the downside. Consider it as a high probability for price to trade back into it before we see a continuation down. Here on the 1-minute, we can see this 5-minute fair value gap. Price makes several attempts to trade into it. We see in the continuation of the trend, from this swing high, trades above, closes. We see an aggressive move downwards, indicating the trend possibly wants to continue downward. We have a swing high. This could be a possible zone of entry, considering we have seen and confirmed a market structure shift to the downside earlier. Price trading back up, going down. We could frame entry here. So let's say we move this here, trade back up, setting our stop loss above the first candle during the fair value gap formation. Set our stop loss above that wick to be conservative, targeting the most recent day lows, or targeting the London session lows. Either way, still have a good trade. 5 RR versus a 6 RR. See price make an aggressive move towards the downside. And at this point in the day, I wouldn't see or consider taking any other opportunities, expecting large returns, considering it's no longer the time of day for price to make moves. Um, we just don't see the volume considering it's a Friday. So it's safest play is to stay out of the market until next week. We'll see what Monday has to bring.